Hello traders and investors, welcome back to the Trend Trader channel. In today's video, we're going to be talking about ETFs. ETFs are also known as exchange traded funds. So we'll be looking at the ETFs that you can use to track the US markets. These ETFs, you can buy them in using rands, not using US dollars or other foreign currencies. So these ETFs can be useful in your tax-free savings account or in your normal South African rand account if you are an EasyEquities user. But also some of these ETFs are available from all other stock brokerage platforms, not just the EasyEquities alone. The ETFs that are not Satrix ETFs, they might not be available on the Satrix platform. But I'm not the user of the Satrix platform. Those who use it, may you please share if the other ETFs are also available on the Satrix platform. So in today's video, we are going to be using TFSA to find information. This is a useful website that I use to find information about ETFs, but it is not just about ETFs. As you can see, they have information about retirement annuity, living annuity, and also exchange traded note. But the focus on this video is on the exchange traded fund. So again, the website is etfsa.co.za. It's a free platform for finding information. Then there are some other things depending on the service that you require that you can get there. So now, because we're looking at the ETFs, you can just click on this ETF, then you can scroll through. You can see that there's a lot of information that is available for investors. The ETFs are listed by the ETF provider. So you can see there's OneVest ETF, Absa Capital, and as you scroll, there's up to Sygnia and Satrix in there. So whatever information you want with regards to the ETF, you can get the MDD, the information sheet of that business. You can see here, and there's the provider of the ETF, the name of the ETF, the region, whether it's a domestic ETF, meaning that it's tracking the local market, which in this case is the Johannesburg Security Exchange, or it's trading or it's tracking foreign market. It could be anything. It could be the US, it could be world, it could be Europe, China, Japan, and all the other countries. And if there's a specific index that the ETF tracks, you'll see that there's also that information in there and the ticker of that ETF. Especially if you want to invest in the ETF, you can just log in into your EasyEquities account, go to the ETF section, and then type the JSE ticker. It should take you straight to that ETF, provided that EasyEquities or any broker for that matter does provide that ETF. Majority of investors, whenever they invest in ETFs, they also consider the total expense ratio, which is basically the amount of money that you pay to the ETF provider for investing in that ETF. You can consider the total expense ratio to be fees. So you can also see the total expense ratio of the specific ETF that you're interested in. And then there is the fact sheet, what earlier I referred to as MDD, because the MDD stands for minimum disclosure document, but it is a fact sheet. Then there's a profile. So depending on what you want, the MDD is updated regular. Majority of these, they will either have MDDs from December 2022 or March 2023, depending on when the provider decided to update the ETF. Remember, ETFs, according to the regulations, they're supposed to be transparent, meaning that the provider regularly they must update their MDDs so that investors at all times they can make informed decisions. So now we said that we're going to be talking about the S&P 500 ETF. There are different S&P 500 ETFs that you can find in the JSE. You can see Invest have one. They have the S&P 500. They also have the S&P 500 Infotech. As you scroll down, you see there's also Coreshares S&P 500. Satrix has S&P 500 as well. And then there's Sygnia, Itrix S&P 500. As you can see, each of the provider has a different total expense ratio. So it's up to you whether you use the total expense ratio to make a decision, or you use other factors. So now I've already went through to look for some of the ETFs that I want to talk about. First, I'm going to talk about the Sygnia Itrix S&P 500. This is the ETF that I buy on my tax-free savings account. It is the only ETF that I buy in there. It is already diversified. I don't see the need to buy more than one ETFs because at the end of the day, they do the same thing. When you look at this, the Sygnia Itrix S&P 500, why do I like it? I like it because it has the semi-annual distributions, meaning that every 6 months, that dividend might declare distribution. We see here the income distribution, it's biannually, it's December and June. When you're looking back, we see that the last time they paid was in December. So this MDD is for 31st December 2022. But the last time they paid was January 2023. So the information that is presented is the information of the previous or of the last 6 months based on the MDD, which was on the 13th of July, where they paid about 39 cents per unit. So this is, in my case, it's in the tax-free savings account, meaning that I got the full amount. If you buy this ETF outside a tax-free saving vehicle, you will then pay the 20% dividend holding tax. So we can see it's an offshore equity ETF because it is tracking the S&P 500, which is the US market. We are based in South Africa, so for us it's a foreign or it's an offshore thing. You can find more information in terms of the net asset value by following the Sygnia website. You can see that over the period since 2017, it shows the growth of 100 Rand invested in the ETF. It would have grown somewhere to around 180 2.46 Rand, but that was around just before December. So a lot of things have changed. We saw that there is a promising recovery in the US market, so a lot of things have changed. We look at the sector allocation. The ETF invests in different things. There's IT, healthcare, all different kinds of sectors that are available in the US. You can also find information about the top 10 holdings. See that Apple is the biggest company by market capitalization in the US. You can see that it is holding 6% in this S&P 500 ETF, followed by Microsoft and Amazon. There's also other companies that are big caps. Each company, so basically the role of the S&P 500 is to track the biggest 500 companies in the New York Security Exchange. So that is why you see that there would be those companies. So any company that is big, if it's not part of the top 500, is not going to be in this list. There's a lot of information that you can find about the ETF, but this is one of the ETFs that you can consider buying. So in comparison to Satrix S&P 500 feeder ETF, we can see that the total expense ratio for the Satrix ETF, it's about 0.4. If we add the 0.15 and the 0.25, we get 0.4%. But for this ETF, it's 0.2%. I'm just trying to find where that information is, but it's supposed to be somewhere around. Okay, you see the combination of these values. The total expense ratio is 0.2%, but it is not. I'm not investing in the Sygnia because of the lower total expense ratio. If you look at this, the Satrix, it does not distribute because this Satrix, it tracks this iShares Core S&P 500 ETF, which is the underlying fund. And then the underlying fund does not pay. There's an information about that the underlying fund does not pay. Therefore, the Satrix S&P 500 ETF does not pay. So that is the rationale for me for not taking the S&P 500. But for other people that might be interested in the Satrix ETF, it is a similar fund. You look at the top 10 holdings, we're still looking at Apple, Microsoft, Amazon. Apple is still around 6%. The sectors that it tracks, the similar sectors that the Sygnia S&P 500 tracks. So the difference between these two is that Sygnia invests in those companies directly, whereas the Satrix, it invests in another ETF. So it's an ETF that is buying another ETF, whereas the Sygnia S&P 500, it's an ETF that buys companies. Another one, that caught my attention, I was not aware of it, is the Coreshares S&P500 index feed. So this one, it does not track iShares, or it does not necessarily invest in the individual companies. It invests in the Vanguard S&P500 ETF. So the objective is also to track the S&P500 index. So there is information here where they say that the ETF can from time to time not necessarily always invest in the ETF. It can also own the companies directly, depending on how the market is performing. So you will find that information in here, because they try by all means to track the S&P 500. So whenever they feel like the underlying ETF is not doing that job, then they start to buy some of those companies. Also, the Coreshares, we can see here there is a distribution, the last 12 months distribution of 64 cents per unit. So again, it seems like this one distribute once. Okay, there is a distribution date, it's March and September. So this ETF, it distributes biannually, same as the Sygnia S&P 500. Remember, at this moment, it is only the Satrix that does not distribute. So this one has a historical yield of about 1%, and it has a tracking error of about 1.17%. You look at the top 10 holdings, similar to the Sygnia and the Satrix. We look at Apple, Microsoft, and Amazon. They make the bulk of the ETF. So this one also, it's started around 2017. You look at the performance of the ETF, it's the one that is in green. We can see that the cumulative growth from, they normalized it to 10 rand, so it would have grown to somewhere just above 23 rand 50. So it shows that it has doubled in price if you had invested at the beginning. If you invest anytime now, you're not going to get this performance. You're going to get from your entry level, and depending on how the market performs in future. Look at the total expense ratio, it's about 0.39%. So this is comparable to the Satrix S&P 500 ETF. The difference being that the Coreshares ETF, it does distributes. Then there is also one vest S&P 500 index feeder. Also, this one does not distribute, it rebalances quarterly. The reason why it does not distribute is because the underlying fund does not distribute. This is also another S&P 500 that tracks another ETF in the US. It tracks the iShares Core S&P 500 ETF. And then I'm looking for information about the fees. You can see the fee, the total expense ratio is about 0.21%. So it's equivalent to Sygnia S&P 500. However, the difference is that it does not distribute. All right, the fees, the total expense is 0.27. It's not the 0.21%. It's actually 0.27. So it's slightly higher than the Sygnia ETF. Remember, there's a lot of other things that you can look at, not just the total expense ratio when you're making a decision. As you saw, most of these ETFs, they have a minimum investment period of about 5 years, meaning that they are aggressive ETFs. But that does not necessarily mean that you should be invested in the ETF for 5 years. Remember, every time you're holding this ETF on an annual basis, the provider gets paid. So the provider is always going to encourage you to hold for your dear life, so that they can also make some money. So look at the sector by allocation. IT makes up the bulk of that sector. We can also see the top 10 holdings. There's Apple, Microsoft, and Amazon. So in a nutshell, all these things, they look similar because they track the same thing. My belief when it comes to buying ETFs, I don't believe in paying a higher total expense ratio, because the managers or the providers, they're basically doing the same job. So it doesn't make sense to me to pay one manager more money than the other. But it's not just about the total expense ratio, at least for me, it's also about the distribution. So comparing the Sygnia, Itrix S&P 500 and the Coreshares, the Sygnia is cheaper in terms of the total expense ratio because it's 0.2%, whereas the Coreshares is 0.39%. Both of them, they distribute semi-annually. Sygnia distribute in January and June, whereas the Coreshares distribute in March and September. I said that it is the only ETF, the Sygnia is the only ETF that I have in my portfolio, because most of all these ETFs, they do the same thing. So buying Sygnia, Satrix, Coreshares, OneVest, I will still be buying the same thing. So I don't need to buy the same thing. I'm comfortable with receiving the distributions biannually. But for the people that love to receive distributions every now and then, maybe you can consider buying the Sygnia Itrix S&P500 and the Coreshares S&P500, so that at least you receive the distributions on a quarterly basis. Remember, these ETFs are priced in rands, so you can buy them in the tax-free savings account, or you can buy them in your normal South African rand account. There are other ETFs that you can buy in the US dollar denominated account. So there is not so much that we can look at if we just want to go back, let's say maybe to about 2017, because some of these ETFs were not available before 2017. Then we can compare the performance. So everything we're gonna base it on the Sygnia S&P500 ETF. Let's see if we can find the Sygnia S&P500. So if you're not familiar with TradingView, we have a video where we showed you how you can create a free TradingView account, and also how you can add the prices and the indicators. So depending on what kind of information you're looking at, you can just change. So in this case, we're using the candlestick to look at the chart of the Sygnia S&P500. You can see that it came about around October 2017 at around 37 rand 14 cent. So now it's trading at 76 rand per share or per ETF. So the price has doubled if you've been invested since 2016. So now if you want to compare a security to another security, there is a plus sign in there that you can click. In this case, we are looking for the Satrix S&P500. So there is the S&P 500. You can compare the performance in terms of a percentage point. You can see also the Satrix started round about the same time. It is the orange line. At this moment, you can see that the Satrix, it outperforms the Sygnia. Maybe that's because it does not distribute, but it could be a combination of many things. So when you look at the Coreshares S&P500 again, we add it, we see that it's just at between the Satrix and Sygnia. And then lastly, we're gonna look at OneVest S&P500. Okay, that's the IT ETF. You're not looking at the IT, you're looking at just the S&P500. Then we can start to see different image. So if you look at here, it shows you which or what is what. So in this case, you already know that this is the OneVest ETF. That one came later. It came around March 2018. It did not start at the same time in 2017. So you can see the OneVest, it outperforms all the other ones despite its high total expense ratio. Let's go back to the total expense ratio. It has a total expense ratio of 0.35%. So already you can see that it is not just about the total expense ratio. There's a lot of other factors that you need to take into consideration, such as the tracking error. So based on this information, we can see that the OneVest S&P500, it outperforms the Sygnia S&P500. All the information that we see here is normalized to the Sygnia S&P500. Had we started with a different ETF, we are going to get a different result. Just in case you use another ETF as the base and then you normalize other things based on that ETF. So we can see that the OneVest significantly outperforms by about 40%. It outperforms that Sygnia S&P 500. Looking at the starting price, they all started round about the same price of about, well, it was 37 rand for the Sygnia S&P 500, but this is normalized in terms of percentage performance, not in terms of price performance. So now the decision to which ETF to buy, it rests on you. The purpose of this video was just to show you all the S&P 500 ETFs that you can choose to invest in if you want to get exposure to the US company, to the US stock market, specifically the S&P 500 index. I hope that this video was useful. If you found value in it, please smash the like button. If you haven't subscribed, please consider subscribing. We will see you in the next video.